There's so many things going on right now. There's no other way to do it than to just bang through this stuff really quickly. We've got real estate, we've got stocks, we've got cryptocurrencies, we've got bankruptcies. We got to talk about all this stuff. Let's go. This is from CNBC. Fed officials see higher rates for some time ahead. The other day, the Federal Reserve made it clear, and now the market is expecting that they're going to keep rates elevated as they are now all throughout 2023. That put a sudden strain on the markets. Investors are getting set for a longer go with these higher rates. By the way, you guys, nothing we say in this video is intended as personalized trading advice for you. CNBC. Dow cuts gains after the Fed meeting minutes signal more rate hikes ahead. There will be more rate hikes. That's what the investment world is coming to terms with. Not only will there be more rate hikes, but the rate hikes we've already had are going to stay higher for longer. So everyone's expecting, just like they all expected the Santa Claus rally, and consumer sentiment is a contrarian indicator. So when everyone's expecting the Santa Claus rally, don't expect it to happen. The same thing with this. Everyone's expecting a Fed pivot. When they don't pivot, that's going to be very bad for the markets. Everyone's baking it into the pie. They'll start lowering rates, that they're going to change their stance on inflation at some point once they've done enough damage to the economy. Bed Bath & Beyond shares plummet after the company warns of potential bankruptcy. This is just an example of what I told you was coming. There will be a deluge of defaults. There will be a wave of bankruptcies, insolvencies. And it'll start happening among media-worthy names that you know, such as Bed Bath & Beyond. In the meantime, beneath the surface, there's a lot of private companies who are taking a hit, and they don't tell anyone, you don't know about it, you don't ever hear about it. Many small businesses are facing potential bankruptcy, and this is just Bed Bath & Beyond. Even a big corporation like that is talking about facing potential bankruptcy. Silvergate Capital tanks more than 40% after CryptoBank discloses massive fourth quarter withdrawals. People are a bit spooked right now, everything to do with cryptocurrencies. There's a lot more of these pseudo bank runs on the various cryptocurrency banks. People are spooked right now. Are we at a capitulation point? Not as of yet. I'll tell you, in my opinion, when we get there, and that will be a great time to dive into Bitcoin investing. It is not now. And nothing we say here is personalized trading advice for you. Salesforce is cutting 10% of its personnel, more than 7,000 employees. Co-CEO Mark Benioff told employees that customers have been more measured in their buying decisions in the challenging macroeconomic environment. So this is just another big name that you know you've heard about that is laying off a significant number of people. It looks like the Federal Reserve's interest rate hikes are starting to pay dividends for them, getting the unemployment rate higher, putting strain on corporations. This is also from CNBC, the Disruptor 50. Coinbase settles with New York State financial regulator for $100 million. The stock spikes. The reason I'm calling out this article is because I always tell you that uncertainty is worse than bad news, than the actual negative news. This is a perfect example of that. They just settled for $100 million, and the share price spiked. Newer investors don't always understand that. How come they come with good earnings and the price went down? It's because the expectation was even higher, and or their competition is doing better than them, or they should have done better. It's all about what people expect, and they bake that into the pie. And then when it comes out, when the actual news comes out, even if it's negative, sometimes that's a positive for the share price of the stock. This is from Wealth, CNBC. Manhattan apartment sales plunge in fourth quarter as brokers fear a frozen market. Manhattan apartment sales fell by 29% in the fourth quarter. I'll read that again in case you weren't paying attention. Manhattan apartment sales fell by 29% in the fourth quarter. That is absolute free fall. The spiking fears of a frozen market in which buyers and sellers stay on the sidelines due to economic and rate fears. If you think back to the last video when I'm telling you about with the mortgages, when it just breaks down, the actual system breaks down. When potential sellers of their homes back out of the market and step back and don't get involved with it, then you could be dealing with a frozen market, which is a lot different than a declining market. It's not about prices coming down. It's about the actual structure breaking down. It doesn't function as it's supposed to. There's all kinds of other different strains and pressures put on people when something breaks down as opposed to declines in price. It's not just about financial losses, it's about the actual system not able to function appropriately. Mortgage demand plunges 13.2% to end 2022 as interest rates head higher again. As rates are on a rising trajectory, you're not going to see people refinancing their mortgages. Anytime the rates back off a little bit, you're going to see a massive jump in new mortgage demand. But as it stands right now, you've got a 13.2% decline in mortgage demand. This is just another piece of the puzzle that I've been telling you is on the way with real estate prices. You can see it playing out ahead of time, and now you can see it playing out in actual real time. Rivian stock hits a new 52-week low after the automaker misses 2022 production target. Rivian is an electric vehicle maker. During 2022, Rivian stock fell 80%, 80. And this is an example that I wanted to point out because a lot of people think electric vehicles are the future, for example. They say, I want to be a good investor. I'm going to take some money and put it into an electric vehicle maker. And they're down now 80% last year. Logically, what you're doing as an experienced investor is brilliant and you're right on track. But there's a lot of other factors between getting invested for the first time and being an effective investor. The shares you're buying can be greatly overvalued. And when there's a delusional curtain which gets pulled back, as it gets pulled back, the share prices travel to where they should be, which is actually even lower than where they are right now, in my opinion. Gold rises to mid-June highs as markets look to Fed minutes. And now those Fed minutes have come out. It's put a little bit of pressure on gold prices, but they're basically staying elevated in terms of the interest rates for longer, for all of this upcoming year. They're so committed to trying to get to that 2% inflation level that they're going to destroy the economy in the process of doing it. And good news, we're all going to be done dealing with out of control inflation. At least there's that. It's just the unfortunate way to do that is absolutely asinine. They're going to punish borrowers and small companies, and all companies for that matter, anyone that is borrowing money. Speaking of gold, the other precious metal, platinum, is set for its best quarter since 2008 on supply concerns, and it's been performing very well over the last year. Platinum rose another 5% Thursday to trade at $1,054 per troy ounce Friday, which is up 22% compared to the start of the quarter. In one quarter, it went up 22%. Over 2022, it gained 9%, according to Reuters. And it outperformed all other precious metals. Gold was up 1% over that time, silver up 3%, palladium fell 4%, but platinum is having a supply constraint squeeze. It's giving a lot of wind to the sails of the prices of platinum. Platinum is 30 times more rare than gold, and it has more industrial uses than gold. If you took all the platinum in the entire earth and squished it into one cube, it could fit in your garage beside your car. And I'm going to read you this part from this CNBC article about platinum. A knock-on effect. Stocks linked to platinum are also posting strong quarterly gains, including Impala Platinum, which added 31.7%, Anglo American Platinum, and Sabina Stillwater, with gains of 21% and 17.6% respectively, going all the way to December 27th. Danske Bank forfeits $2 billion after pleading guilty to fraud. They agreed to pay $2 billion to end a long-running U.S. probe into money laundering through its Estonia branch. The reason I wanted to pull out this article is that it just goes to show you there are consequences to poor behavior, but you're not going to see any of that money going to the people who got hurt by this fraud. A lot of the times, the majority of the fine goes to the bureaucratic organization that imposes the fine. It doesn't go to John and Jill McLeod on the street. Consumer insolvencies in November reached the highest number since the pandemic began. This is from Yahoo Finance. Consumer insolvencies were up 16.3% in November 2022, compared with the same month the year prior. And business insolvencies were up 58.3%. This is what I was telling you was coming. This is the insolvency deluge. It's begun and it will get worse, but I'm showing you as it's starting to pick up steam, you're going to see these headlines. Consumer insolvencies are up 9.5% compared to a year earlier. Business insolvencies up 37.8%. And just wait. As Peter Leeds always tells you, just wait. And here's an article from Toronto, my hometown. Toronto housing market ends year with a whimper, with the benchmark prices down 8.9%. They're talking about real estate. Toronto was an even more out of control market. A lot of the places in Canada were even more out of control, overvalued than a lot of stuff we're seeing in the U.S. And the U.S. is dramatically overvalued in a lot of markets. But Canada was just ridiculous, and now it's starting to turn around. It's all going to come down together and rip out the wealth effect out of the hands of every single person. And this is from Yahoo Finance. More employers plan to hire than fire in the next few months, despite recession worries. Right, which is implying that the unemployment rate will still have strength, which is also then having a follow-on effect that they'll need to keep their rates higher for longer and quite potentially raise them by even more until they turn the stubborn employment around. The labor market is still solid. There's more job openings than the number of people who could take those jobs. Either you start taking 2 jobs, we get robots to do some of the work, or we just start having unfilled jobs, and however that's going to affect you in every single way. For example, if there's not enough waitresses, then you wait longer for service. It's easier to get a job if you are a waitress. The restaurant may need to shut down or work at partial capacity, therefore taking a hit financially because of that. There's a lot of effects that happen when the unemployment rate is like this. And the one I always tell you is that if it's anywhere below 5%, that is pressure on small businesses. Crypto lender Genesis lays off 30% of its staff. This is from Reuters. And that's a second round of layoffs in less than 6 months. And this is just what you're seeing where the industry ballooned, it swelled, and now there's been the whole Sam Bankman-Fried debacle and a lot of other ones too. There's a lot of unwinding of this industry, and that involves a lot of companies either going bankrupt, going delinquent, or laying off employees to try to get their cost structure under control. If you're thinking about getting involved with cryptocurrencies, in my opinion, this is not personalized trading advice for you, but in my opinion, I don't think now's the time to do it. There are so many moving parts right now. There's so many other shoes to drop. There's so much stuff going on right now at once, with a lot of it being complete uncertainty. People are not sure if they're going to get some money back from getting ripped off or if they're not. And spoiler alert, you're not going to get even close to what you think, and it'll take longer than you think too. But I wouldn't go near cryptocurrencies right now. Way too many moving parts. If I'm looking at a stock like this, I don't go near that stock. There's too much stuff going on at once. You can't get a proper valuation. I'll tell you what the best job in the entire world is. I'll show you on screen right now. This is the single best job I've ever seen. I wish that this was what I did for a career. But anyways, this is just another example of the unwinding of the entire crypto space, specifically the NFT space. Like, come on, guys. That was full bore delusional, in my opinion. U.S. mortgage rates climbed for the second straight week, hitting 6.48%. This is according to Bloomberg and Yahoo Finance. The average for a 30-year fixed loan was 6.48%, up from 6.42% last week, and the highest since early December, Freddie Mac said in a statement Thursday. Seesawing loan costs aren't likely to inspire confidence in would-be homebuyers, who have been pulling away from the market for months. With demand in a slump, sellers are also holding back, which I'll remind you, put that in context with what I said earlier about the market freezing up. They're holding back, reluctant to accept discounts or give up cheap mortgages they locked in before the Federal Reserve started hiking its benchmark interest rate last year. Mortgage application activity sunk to a quarter-century low this week as high mortgage rates continue to weaken the housing market, said Sam Cadler, Freddie Mac's chief economist. China's new COVID surge is crippling the world's most important factories and biggest ports. Do you remember, it was either the last video or the one before that, I was telling you it's going to affect you significantly and directly. Everything that's going on with China trying the zero COVID policy and then going the other way on it, it just made it all worse for the entire world now. Instead of being past most of this, we're back where we started with some of these countries, and we're even shutting the borders to certain places in Europe, to Canada. You can't go there from China. Well, you can get there from China, but you have to either have a negative test before you fly, or when you get there on the ground, you have to quarantine and take a test. They have all sorts of regulations right now, so it becomes a whole rigmarole no matter how you look at it. Freight booking cancellations are increasing at the ports of Shanghai and Shenzhen, as factories cannot operate properly due to a lot of workers getting COVID. Congestion is also building off the ports of Ningbo and Qingdao. U.S. manufacturing orders from China are down 40% and demand collapse. The economy is falling off a cliff, and all of a sudden we're not buying as much stuff from China. And you're seeing this demand collapse, and that's going to take a ton of pressure off of the supply chain backlogs. Speaking of which, freight rates from China to the West Coast are down 90%, 90, as global trade falls off fast. And all of this, by the way, just because we're on the topic, is anti-inflationary.